Okay. Good afternoon, everyone. We're going to go ahead and call the Senate Committee on Revenue and Economic Development to order. Madam Secretary, could you please call the roll?
Senator Buck. Here. Senator Nyate. Senator Severs-Gansert. Senator Spearman. And Chair Neal.
Here. Mark Senator Spearman present as she comes in, and Mark Senator Gansert excused. Okay, so we have a presentation and a bill today. I'm going to go ahead and call up Ms. Hughes and the tax team. And you guys are going to give us an overview on what is SUDA. And then we'll go into SB 150. I'll open the hearing after that. Good afternoon.
Good afternoon and happy Valentine's Day. For the record, my name is Shelley Hughes and I'm the Deputy Executive Director for the Department of Taxation. With me I have Chief Deputy Yvonne Navarez-Goodson and Deputy Director of Compliance Jennifer Roebuck. Thank you for allowing us to present an overview of sales and use tax. Sales and use taxes comprise the largest revenue category in our state. Sales and use tax collections made up $6.6 billion or 69.4% of the $9.5 billion collected by the department in fiscal year 2022. This slide demonstrates the sales and use tax implementation timeline with historical references. The first sales and use tax enacted in Nevada was the Sales and Use Tax Act of 1955, with the passage of SB 171 during the 1955 legislative session. The act imposed a 2% sales tax on sales of tangible personal property at retail and imposed a 2% use tax on the storage, use, or other consumption of tangible personal property on which sales tax has not been paid. After the passage of SB 171, a petition for a referendum to submit the act to the vote of the people was circulated pursuant to Section 1, Article 19 of the Nevada Constitution. The act was approved at a referendum of voters, which means the act cannot be amended or repealed by action of the legislature. The legislature can propose changes to the act, but they must be submitted to the voters for approval. In other words, any increase in the 2% tax rate or any reduction in the 2% tax rate, including an exemption of the 2% tax rate, must go to the vote of the people before those changes can be made legislatively. It's important to note that this requirement only applies to the 2% portion of the sales tax provisions contained in Chapter 372 of the NRS. However, it also doesn't apply to any administrative provisions in the sales and use tax law in Chapter 372 of the NRS. In 1967, the local school support tax law was established and imposed a 1% sales tax on sales of tangible personal property at retail and imposed a 1% use tax on the storage, use, or other consumption of tangible personal property on which sales tax was not paid. The percentage has increased throughout the years and has been 2.6% since 2009. The city-county relief tax was established in 1969 and imposed a sales tax at the rate of 0.5% when affected by county ordinance. The basic city-county relief tax, referred to as BCC-RT, and the supplemental city-county relief tax, referred to as SCC-RT, stemmed from the city-county relief tax and were established in 1981. The BCC-RT imposes a 0.5% sales tax and on sales tax and a 0.5% use tax. The SCC-RT imposes a 1.75% sales tax and a 1.75% use tax. Sales tax is one of the 21 tax types that the department oversees. Chapter 372 of the NRS governs sales and use tax. Sales tax is imposed on the gross receipts from the retail sales of tangible personal property. Gross receipts is defined as the sales price of tangible personal property, which is often referred to as TPP. Tangible personal property, or TPP, is defined as personal property which may be seen, weighed, measured, felt, or touched, or which is in any other manner perceptible to the senses. The retailer is required to collect the sales tax from its customer on the gross receipts of the sale of TPP. Something to keep in mind is that the sales tax is not imposed on the property itself, it is imposed on the retail sale transaction. The tax is the obligation of the retailer and it must be collected from the consumer. Before we go on to talk about the tax rates, I'd like to discuss use tax. NRS 372185 specifically calls out purchases from out of state that would have been taxable if purchased in Nevada. Use tax must be paid on these purchases. NRS 372-190 extinguishes the use tax liability if the purchaser pays sales tax and possesses a receipt showing sales tax was paid. It's tempting to think that sales tax and use tax are the same. However, this is not the case. The simple distinction is that sales tax is imposed on the retailer and the retailer reports and pays the sales tax to the state, while use tax is paid by the consumer directly to the state in situations when the sales tax was not paid. For example, if you buy something from out of state and have it delivered to your home here in Nevada, it's possible that the retailer did not charge sales tax because the retailer was not registered to do so in Nevada. In this case, you would be required to remit the use tax directly to the state. We talked about this in our presentation last week, but we'll briefly review it again today. The sales and use tax rate is comprised of these four allocations of the tax, plus any local options tax. The base tax rate is 6.85%, which has an allocation of 2% that goes to the state general fund. 2.6% is the local school support tax, or LSST. 0.5% is the basic city county relief tax, or BCCRT. 1.75 is the supplemental city county relief tax, or SCCRT. And the local governments have the option to adopt local option taxes ranging anywhere from 0.10% to 0.54%, which would increase the 6.85% minimum state tax rate. This slide details the state portion of sales and use tax as outlined in NRS 372. As mentioned, the 2% tax rate has been the same since 1955. The most recent exemption was approved by the voters on November 6, 2018, which provides an exemption of feminine hygiene products that was effective January 1st, 2019. The funding for the state portion is distributed to the state general fund. This slide covers the 2.6 local school support tax outlined in NRS 374. This tax was implemented in 1967. The current rate of 2.6% has been in place since July 1st, 2009. Continuing on with the basic city county relief tax, or BCCRT, this slide has the historical distribution changes. The distribution that is used today has not changed since 2009. Supplemental city county relief tax is outlined in NRS 354 and 377. The rate is 1.75% and was enacted in the 1981 legislative session. We discuss the consolidated tax distribution frequently when we discuss two of the components of the sales tax rate, the SCCRT and the BCCRT. Because of the complicated nature of C-tax, we will not go into the detail on the distribution formulas today, but I wanted to answer Senator Buck's questions from last week regarding the C-tax formula. When it was calculated last, has it ever been recalculated, and what is the process for recalculation? Consolidated tax, or C-tax, distributions to Nevada counties include cigarette tax, liquor tax, BCCRT, SCCRT, RPTT, which is real property transfer tax, and the governmental service tax. C-tax was formulated in 1997. The formula is driven by statute, and the formula was last adjusted in 2013 with AB 68, which revised the base and excess distribution formulas. The provisions of NRS 360-600 through 360-740 govern the formula calculations. Base allocations are recalculated annually at the start of every fiscal year. The last update was completed and provided to local governments on September 6, 2022. The process for recalculation can be found in NRS 360.680 and NRS 360.690. The last component that makes up the sales tax rate is the local options tax. Counties have the option to increase their sales and use tax rates for specific purposes by ordinance. Most of the counties have additional components in their sales tax rates for a variety of initiatives. The authority for the option taxes can be found in NRS 374A, NRS 377A through 377D, and NRS 543. These are the counties who have local option taxes. The slide shows the counties where the option is imposed, the rate of the options tax, the authority for that options tax, the required designation of the proceeds, and the date the option tax was imposed. I think this might be the third time you've seen this map, and next time there will be a quiz. This map shows the sales and use tax rates by location. Clark County has the highest sales tax rate of 8.375%, and Humboldt, Eureka, Mineral, and Esmeralda counties have the lowest sales tax rate of 6.85%. I will now turn it over to Deputy Director Roebuck to talk about the administration of the sales and use tax.
Thank you, Director Hughes. Good afternoon, Madam Chair and members of the committee. For the record, I'm Jennifer Roebuck, Deputy Director of the Compliance Division for the department. Whether or not a sale is subject to sales tax is one of the more common questions that arises. 372-155 says that all gross receipts are taxable until the contrary is established. Section 1 says the burden of proof is on the seller. In other words, all sales are taxable unless specifically exempted by statute. The exempted transaction must be sufficiently supported in case of audit. Let's address the temptation of some consumers to purchase property in a state that doesn't have a sales tax in order to avoid sales tax here in their home state. NRS 372-250 and 372-255 address this temptation by stating that tangible personal property is presumed to be for storage, use, or consumption in Nevada if it's brought to the state or even if it's delivered outside the state to residents of Nevada. In other words, all purchases for storage or use in Nevada are taxable unless specifically exempted by statute. Again, the exempted transaction must be sufficiently supported. Now I'll discuss the transactions when sales or use tax don't apply. For discussion purposes, I've categorized the exemptions loosely into 3 categories: transaction-based, property-based, and customer or entity-based exemptions. First up is transaction-based exemptions. Regular cash discounts on sales do reduce the taxable sales price. Note that this does not include manufacturer rebates because the seller is compensated for the total sales price by both the customer and the manufacturer. Repair labor and installation labor are not taxable as long as the seller itemizes the property separately from the labor. Some labor is taxable as part of a taxable sale, so these transactions need to be examined carefully. Sometimes a retailer accepts a trade-in as a partial payment in a retail sale. Generally, the amount of a trade-in does not reduce a taxable sales price because the value of that trade is payment. But there is a specific exemption for vehicle trades, and there's a partial tax credit for vessels that are traded in. So what about when I, as a private individual, want to sell my car? Occasional sales are exempt from sales tax. Put very simply, a retailer is defined as a person making more than 2 retail sales in a 12-month period. Note that there's no mention of exempting private party sales. It's really based on the number of sales. So as long as I'm not selling more than a couple of cars, I don't need to register as a retailer and collect sales tax. It should be noted, sales for resale are not retail sales. When a business makes a purchase for the purpose of resale, it presents a resale certificate. The seller does not charge sales tax and keeps the certificate on file in case of audit. By presenting the completed resale certificate, the purchaser is taking the responsibility for the sales tax on the subsequent sale of the specific property on the certificate, or the use tax if the property is later used instead of resold. A quick note about giveaways. If a retailer purchases property for resale and then gives it away or comps it, they must remit the use tax on the untaxed cost of that property. Deducting bad debt from taxable sales is pretty complex. For the purpose of this presentation, I'll just introduce the concept. Put simply, if a retailer makes a sale on credit, the full sales price is reported for sales tax to the department when the property is delivered to the customer. Note that the retailer has not necessarily collected the full sales tax at the time of the sale. If the purchaser defaults, the seller is entitled to a deduction equal to the unrealized portion of the taxable sales price. The type of property that is sold can also determine the taxability of the retail sale. I'll just highlight some of the more commonly misunderstood exemptions. Food for human consumption is exempt from sales tax. Food for human consumption does not include prepared food intended for immediate consumption. Very simply, if you think of groceries, this food is generally exempt. If you think of food you buy at a restaurant, it's taxable. If you're asked, is this for here or to go? More than likely, the food is prepared in some form and it's taxable. The definitions are involved, so it's not cut and dry, and there are plenty of gray areas. Medicine is exempt under certain circumstances. For example, we think of aspirin as medicine. If it's prescribed or provided by a physician, the aspirin is exempt. When you buy the same aspirin at a convenience store, you should be paying sales tax. Domestic fuels means any matter used to produce domestic heat. Here's another example where the same item may be exempt or taxable, depending on the nature of the sale. Propane purchased to heat one's home is exempt, and propane used to cook is taxable. Gas, electricity, and water are exempt if delivered to consumers through mains, lines, or pipes. Again, keep in mind, this list here is simplified and shouldn't be taken at face value. There's lots of complexities involved. This slide includes some sales that are exempt because of who the customer is. Sales to a customer who is federal government, state of Nevada, or local government within Nevada are exempt. Construction contractors are the consumers of all materials used to fill a contract. Their purchases are taxable, even if the contract is with an exempt client. The noted exemption here is only for those contractors who are a constituent part of an exempt entity, and great care must be taken in these circumstances. Finally, there are some nonprofit organizations created for religious, charitable, or educational purposes known as RCE that must go through an application review process before receiving approval for an exemption from sales and use tax. A copy of the RCE approval letters must be kept by the retailer to support the exempt sale. The letters do expire, and the RCE organization must renew the exempt status. Retailers are expected to keep reliable, complete records as assurance that the actual customer is exempt. This can be harder than it seems. For example, an employee of the state who's traveling for work has lunch at a restaurant during the trip. They're saying that their lunch should be exempt because they're on business, and they're being reimbursed by the state, who is exempt. This is incorrect. The lunch is not exempt from sales tax, even if they're being reimbursed. The purchaser must be the state, and the payment must be made directly by the state. Notice that businesses that make purchases for resale are not included in the customer-based exempt sales. The businesses themselves are not exempt. Only the sales to these businesses specifically for resale are exempt. Businesses that are awarded an abatement or deferral of tax agreement do provide exemption letters and then report the agreed-upon portion of tax on special tax returns. Much like visiting customers from another state, tribal members pay Nevada sales tax unless the sale occurs on tribal land. The tribes do have their own sales tax on tribal land. So here's an example to help understand what retailers need to look for if a customer claims the sale is exempt. So here we have a retail store selling highly priced items, and they're advertising to consumers both inside and outside the state. So are these sales of high-value items taxable, and how do we know the retailer is properly reporting the sales tax to Nevada? Well, first, is the item purchased for resale? They would have a resale certificate. Is the item itself considered exempt from taxation? That would be exempt pursuant to statute. Is the item being shipped to a customer's location for use outside Nevada? If that's the case, then they would keep on hand their shipping documents that reflect that. Is the item being purchased by a governmental entity? In that case, they would have sufficient documentation showing that the governmental entity is exempt under statute and that they have themselves paid for it. Is the item being purchased for an organization that has a sales and use tax exemption letter issued by the Nevada Department of Taxation? And this is where the retailer would keep that copy of an RCE letter or perhaps an abatement exemption letter or some other letter that is issued by the department. It's important to note that the department is prohibited from sharing any taxpayer reporting information. In fact, we must protect the identity of individual taxpayers even in the case of reported statistics. We do accept leads or referrals as to whether a particular taxpayer may have not collected and remitted sales tax. However, we can't release the results of any leads or referrals. Like anything else, the passage of time affects how and what we consume. Whether a food product is taxable, for example, can be quite blurry, depending on whether it's prepared, where it's intended to be consumed, among other things. Here we have a couple of significant common types of retail sales that have evolved substantially over the past few decades. Many types of tangible personal property have been converted to digital or electronic format. Streaming or downloaded games, music, reading materials, movies, and other programs were originally on a tangible media and subject to sales tax. The sales of digital or electronically transmitted entertainment are not tangible personal property and are not taxable in our current structure in Nevada. Consumers who purchase from remote or online retailers who are not registered to collect Nevada sales tax have been difficult to identify for payment of use tax. Becoming a full member of Streamline Sales Tax was instrumental in receiving sales tax due to Nevada by way of central service provider reporting. The Wayfair decision in 2018 and the passage of remote sellers and marketplace facilitators laws have helped Nevada make enormous strides in closing this gap. The Taxpayers' Bill of Rights is published on our website and is available as a pamphlet. You can find it listed under publications on our website. It includes an expanded explanation of each tenet of the Bill of Rights set forth in NRS 36291. Our philosophy is simply stated. Most people want to pay what they owe on time and in full, and an important part of our job is to explain the taxpayers' rights and responsibilities as clearly as possible. Our goal is to take the mystery out of tax administration, and when that happens, everybody benefits, taxpayers and tax administrators alike. Certain taxes are collected from the customer and held in trust by a taxpayer who functions as a conduit between the customer and the state. The statutes on this slide address the application of credits and refunds. If a taxpayer finds an over-report of tax to the department, the taxpayer must submit the claim for refund, typically in the form of amended returns, within the statutory time period of 3 years. It should be noted that if a retailer requests a refund of sales tax from the department, it must be verified that the tax is refunded or not collected in the first place from their customer. This is to prevent sales tax both collected and refunded from enriching the retailer by that amount. The retailer must demonstrate that overcollected sales tax was refunded to the customer. Further, if a retailer overcollects sales tax and does not refund it to the customer, the overcollected tax must still be remitted to the state. NRS 360-2935 requires the department to pay interest on refunds of sales tax to taxpayers unless the overpayment was intentional or due to carelessness. In those situations when the department refunds overcollected tax, paying interest on the money the taxpayer has had in their control is an undue enrichment. Senate Bill 29, which has yet to be introduced, proposes to disallow interest in these specific situations. Passage of the bill would enable the department to disallow interest on refunds resulting from taxpayer overcollection. Taxpayers would not benefit from earning interest resulting from the overcollection of taxes.
Can I ask a question right there? So on the refund slide, what if the Department of Tax is delayed in issuing the refund? Is there interest?
The department is required to add interest to any refunds unless there's some reason that the taxpayer themselves were found to be careless or if it was intentional disregard. And we do have a regulation that helps us to define that.
What's the rate of interest?
It is 0.25% per month.
So a quarter? Okay. I mean, I'm glad you kept nodding. Is that a quarter every day?
It is 0.25% per month, so that is,
Oh.
yes.
That's no money. Okay, thanks.
Thank you, ma'am. In the 81st session, Senate Bill 441 moved the seller's permit provision from NRS 372, 374, and 377 into a single location in NRS 360. This move simplifies the requirements for any future changes to the seller's permit. Taxpayers who are registered for a seller's permit, also known as a sales tax permit, are required by law to file tax returns by the end of the month following the reporting period. The filing frequency may be monthly, quarterly, or annually, depending upon sales volume. The total gross receipts, total exempt sales, and total taxable sales for the reporting period must be reported in each county that the sales took place. There's also a column to report purchases for purchases for use tax. Excuse me. Businesses that operate solely as consumers report similarly. However, they only report the total amount of purchases reportable for use tax in the appropriate county on a consumer use tax return. The department currently has 162,000 businesses registered for sales and use tax. 105,000 pay the seller's permit fee to collect the sales tax. Should a taxpayer fail to report timely or correctly, there are penalties and interest that are imposed. NRS 360-417 provides authority to assess penalty and interest on the amount of unpaid tax, and this is used for cases when tax is paid late. NRS 360-300 provides authority to estimate the amount of tax for unfiled periods and to assess penalty and interest on the unpaid estimated tax. This is used for delinquent periods, that is, no return was filed at all. NRS 360-330 provides authority to impose an additional penalty in cases the department finds negligence or additional disregard. NRS 360-340 provides authority to assess 25% of the tax due to fraud or evasion. If the fraud or evasion involves vehicles, vessels, or aircraft, the penalty is 3 times the tax. NRS 372-354 states that sales tax collected from the consumer must be held in a separate account in trust for the state. In other words, taxpayers should not be using the collected sales tax for other purposes. NRS 372-735 requires taxpayers to keep sufficient records for at least 4 years and as long as 8 years. This statute is particularly important in case of audit. And speaking of audit, this slide includes authority to investigate or audit the books of taxpayers to assure compliance. Auditors are basically checking the taxpayer's homework. They don't collect any tax money as part of their duties. Audit selection usually occurs by random selection. The audit case is assigned to an auditor who contacts the taxpayer by telephone. They discuss the audit scope and necessary records, and they schedule a date and time for the audit to start. A confirmation letter is sent to the taxpayer so that they can properly prepare for the audit. The audit period is generally 3 years, but can be as long as 8 years if the taxpayer didn't file returns. Auditors may test the reporting by selecting a sample of transactions to review. They compare the taxpayer's activities and books with what was reported to the department and make adjustments if errors are identified. As part of this process, they assist taxpayers with questions, and in most cases, the audit goes smoothly. The auditor concludes with an exit interview to explain findings, advise of any penalties and interest if applicable, and explain the appeal process. The auditor mails an audit report that explains adjustments, authority, and recommendations, along with schedules detailing any adjustments. Carefully used enforcement tools encourage voluntary compliance while assuring honest and conscientious taxpayers that they're not shouldering an unfair burden. NRS 360.095 provides that forms, instructions, and regulations must be brief and easy to understand. Once a form and straightforward instructions are provided, they should not change unless there's some compelling reason. This statute also requires that exemptions or waivers must be equitable. and while being consistent with legislative intent, retain broadest base for the affected tax. Audits and collection activity must be equitable and uniform. This is intended to assure every taxpayer pays the full amount imposed. An important note, pursuant to NRS 360.145, department employees cannot be evaluated on assessment or collection amounts. Statute provides the Tax Commission and the department several options to assist taxpayers with their payment and reporting obligations. NRS 360.263 gives the Nevada Tax Commission the authority to enter into a compromise of taxpayer liability under limited conditions. 360.419 allows the department to waive or reduce interest or penalty as long as the tax is paid and under specific conditions. 360.2915 includes provisions for the department to adopt regulations for payment plans. And NAC 360.440 includes the application process for voluntary disclosures by taxpayers who have not registered or filed returns and who have not been contacted or investigated by the department. The taxpayer comes forward voluntarily, files returns, pays the tax due, and applies for waiver of penalty and interest under this program. And I'll go ahead and introduce Chief Navarez-Goodson.
Thank you, Madam Chair. For the record, Yvonne Navarez-Goodson, Chief Deputy for the Department of Taxation. We're going to move on to next couple of slides, the first of which explains a little bit about the streamlined sales and use tax agreement, otherwise referred to as SUTA. SUTA is the agreement among member states to simplify and modernize sales and use tax administration in order to substantially reduce the burden of sales tax compliance systems. The agreement focuses on improved sales and use tax administration for all sellers and for all types of commerce, including through collections, definitions, registrations, exemptions, returns, and remittances. Nevada became a full member to the governing board of the Streamlined Sales and Use Tax Agreement on April 1st, 2008. SUTA does not override state laws. However, states must comply with the requirements contained in SUTA to be a member state. 23 states are full members of the SUTA. SUTA minimizes costs and administrative burdens on retailers that collect sales tax, particularly retailers operating in multiple states. It encourages remote sellers selling over the internet and by mail order to collect tax on sales to customers living in the streamlined member states. It levels the playing field so that local brick and mortar stores and remote sellers operate under the same rules. SUTA ensures that all retailers can conduct their business in a fair and level competitive environment. NRS Chapter 360B is known as the Simplified Sales and Use Tax Administration Act, and the provisions of this chapter implement the Streamlined Sales and Use Tax Agreement. SUTA contains sourcing rules, and in Nevada, we implemented NRS 360B.360, which provides that the sourcing takes place where the sale takes place or where the delivery occurs. Where the sale is sourced is important for sales tax purposes to know what tax rate applies and what state or local government entity receives the distribution of that sales tax. Also discussed last week in our presentation was Nevada's sales tax holiday. Nevada implemented a sales tax holiday in 2021. After Senate Bill 440 was signed into law, the department discovered that Nevada was out of compliance with the Streamlined Sales and Use Tax Agreement. For SB 440 allowed for a letter of exemption for sales or use tax during the Nevada Day holiday weekend to be issued to a member of the Nevada National Guard on active duty who resided in Nevada, and any family members who resided in the same household and were related to the Guard member within the first degree of consanguinity or affinity. In order to receive the letter of exemption, the member of the National Guard would apply through his or her commanding officer no later than 30 days before the date on which Nevada Day is observed. If eligible, the department would issue a letter of exemption to the Guard member, and the Guard member or family member would present that letter of exemption to a retailer for exemption from the applicable sales tax on the purchase of tangible personal property. The retailer can then seek a refund from the department for the amount of sales tax that was collected and remitted to the department. This exemption only applies to Nevada's sales and use tax and does not apply to does not provide an exemption from any other tax. For this past sales tax holiday in 2022, the department issued a total of 2,330 exemption letters, 1,003 to the Air National Guard and 1,327 to the Army National Guard. Unfortunately, as we mentioned last week, unfortunately, we're unable to determine the total number of exemptions actually claimed. Taxpayers report total exemptions as a lump sum by county, regardless of the type of exemption. In other words, there are multiple exemptions that can be included in the number reported in the exemption column on a return, so that information from any one exemption cannot be compiled. SB 50, which we will present later today, will help with this problem. Not only will it bring us into compliance with SUTA, but it will also allow us to track the number of exemptions claimed. Next slide. Our next slide outlines NAC 372.856 and provides factors for when a business has a physical presence or nexus with Nevada. As mentioned previously, when a business has a physical presence or nexus in Nevada, that business is required to remit sales tax on its sales to Nevada residents. NAC 372.856 provides two factors that determine whether a retailer or a seller has sufficient nexus with the state of Nevada. The first factor is whether that retailer is part of a controlled group of corporations that has a component member with physical presence in this state, and the retailer and component member have activities that are related, such as they both sell a similar line of products or services that have the same or a similar name. They both maintain an office, distribution facility, warehouse, or storage place in Nevada to facilitate the delivery of tangible personal property that is sold by the retailer. They both use trademarks or trade names in this state that are substantially similar. They both deliver, install, assemble, or perform maintenance services for the retailer's customers within this state. Or the component member facilitates the retailer's delivery of tangible personal property to customers in this state, or allow for the retailer's customers to pick up the tangible personal property sold by the retailer at the business owned by the component member in this state. Finally, another option would be that the retailer or component member performs activities in Nevada that are significantly associated with the retailer's ability to establish or maintain a market in this state for the retailer's products or services. The second factor to determine whether a retailer or seller has sufficient nexus with Nevada is whether the seller enters into an agreement with a resident of this state under which the resident, for a commission or other consideration based upon the sale of tangible personal property by the retailer, either directly or indirectly refers potential customers to the retailer, and for which the cumulative gross receipts from sales by the retailer to the customers in this state who are referred to the retailer by all residents with such an agreement with the retailer is in excess of $10,000 during the preceding 4 quarterly periods. Nevada's journey to impose tax on out-of-state businesses that sell into Nevada without a physical presence here started in 2018. Many states, including Nevada, had trouble collecting sales tax on out-of-state sellers who sold tangible property into their state, but otherwise had no physical presence. This put an out-of-state seller in a better position than an in-state seller because they did not have to impose tax on their sales, where the in-state sellers were required to impose that same tax. This resulted in in-state sellers having to sell the same product at a higher price to in-state customers. Thus, most in-state customers would purchase from the out-of-state sellers, giving the sellers an unfair advantage in the market. Prior to 2018, for a state to be able to collect tax from these out-of-state sellers, the seller had to have physical presence or nexus in the state. This made it really difficult for those states to collect from online retailers. Many states had to get creative and expand the definition of physical presence so that the state could impose the sales tax on those out-of-state sellers. And then the Wayfair decision came in 2018. The Wayfair decision, implemented by the Supreme Court of the United States, provided states with the ability to collect sales tax from out-of-state sellers regardless of physical presence. The Supreme Court found that the economic presence or economic nexus with the state was sufficient. An economic nexus is defined as a connection between a state and a business when annual sales, revenue, and/or transaction quantity reach a threshold set by the state required to make them register for sales tax. In the Wayfair decision, the Supreme Court rule emphasized that, in that case it was South Dakota, did three important things to protect against any undue burden. The first was that they determined that the sales tax would not be retroactively applied. There were limits put in place by South Dakota to protect small businesses, and South Dakota was also a member of Streamline, as is Nevada. In Nevada, we adopted remote seller rules, otherwise known as the Wayfair decision, on October 1st, 2018. This was a change from how Nevada then imposed sales tax so that a seller was no longer required to have a physical presence or any other legal requirement to register or collect sales or use tax on the seller's sales in Nevada. Nevada adopted a small seller exception, which mirrors the South Dakota exceptions, which required sellers to have more than $100,000 in retail sales or 200 or more retail transactions in Nevada in order to be required to collect and remit the sales tax. Small sellers may still register and collect and remit sales tax in Nevada as a benefit to their Nevada customers. Once a remote seller reaches the threshold to collect sales and use tax, they must register by the first day of the calendar month that begins at least 30 calendar days after that threshold has been met. Remote sellers can also register with Streamline sales tax or directly with the department. Remote sellers that do not meet the small seller exception are required to remit sales tax and retail sales delivered to Nevada, including those made over the internet. These sellers are required to collect both state and local sales taxes. The department continues to make contact with known internet retailers to advise them of this regulation and the need to potentially register with Streamline or through the Nevada registration process with the department. I'll next go into a little bit of history with regard to our marketplace facilitators. In the 2019 legislative session, Senator Neal and the Assembly Committee on Taxation sponsored Assembly Bill 445 to require marketplace facilitators to collect and remit both state and local sales taxes owed on retail sales they facilitate in Nevada, including those made over the internet. The provisions of this bill were codified as NRS 372.746 to 372.754. A marketplace is any physical or electronic presence, including but not limited to a store, booth, internet website, catalog, television, radio broadcast, or other dedicated sales software application where a marketplace seller sells or offers the sale of tangible personal property. Examples of this that might be relevant include platforms such as Amazon, eBay, auction houses, trade shows, and conventions. Like remote sellers, marketplace facilitators can register with Streamline sales tax or directly with the department. In 2022, the department estimates that we had 34 registered marketplace facilitators and estimates that those registered facilitators remitted total sales tax revenue of approximately $232 million. These are only estimated figures because when the department began implementing the marketplace facilitator filing requirement, many businesses erroneously registered as marketplace facilitators. The department has been manually reviewing these accounts to determine a list of verified marketplace facilitators, and the information provided above is really that of our verified marketplace facilitator accounts. Under the marketplace facilitator statutes, there are two types of sellers. We have a marketplace facilitator that generally facilitates retail sales by providing the infrastructure or the support for the retail sales to occur and collects the sales price, processes payments, or receives compensation for the retail sale. If a marketplace facilitator facilitates a sale on behalf of a marketplace seller and meets the threshold of $100,000 or 200 separate transactions in the preceding or current calendar year, then the facilitator is responsible for imposing, collecting, and remitting the taxes on the marketplace seller's sales that are made through the marketplace. The other type of seller is the marketplace seller, and that seller is a person who has an agreement with a marketplace facilitator and makes retail sales of tangible merchandise through the marketplace owned, operated, or controlled by the marketplace facilitator. The marketplace seller can also be a remote seller if they make direct sales into Nevada. If the marketplace seller makes direct sales into Nevada without the use of a marketplace facilitator, the seller will be responsible for the imposition, collection, and remittance of taxes on those sales. It is possible that a marketplace facilitator also has a physical presence in Nevada. If that is the case, and the marketplace facilitator has those direct Nevada retail sales, the marketplace facilitator must collect and remit the tax on those sales. And when a business has a physical presence, the small business threshold does not apply. Tax is due on all sales in Nevada. Moving on to a brief summary of our confidentiality statutes. The department has broad confidentiality requirements regarding taxpayer information, including the administration or collection of any tax, fee, assessment, or the imposition of disciplinary actions taken against taxpayers under most circumstances. The department and its employees are bound under NRS 360.255, which protects taxpayer information with specific limited exceptions as detailed in the full statute. These include the need to share information for proper oversight, budgeting, auditing, and legal representation of the department. I'd also like to give a brief overview of our appeal process. The statutes listed here in this slide set forth our appeals process. The first stage in the appeals process is the petition for redetermination. If a taxpayer disputes an audit assessment or deficiency determination, the taxpayer can file a petition for redetermination with the department to reevaluate that assessment or that deficiency. The petition for redetermination form must be submitted within 45 days from the date of the deficiency determination or notice of credit. This 45-day due date is clearly stated on all notices sent to the taxpayer. If a taxpayer fails to file the petition for redetermination timely, the determination may become final and the taxpayer may be considered to have waived its appeal rights. The petition for redetermination sets forth the amount of the determination being contested and the grounds for seeking it pursuant to NRS 360.365 and NRS 360.360. Department staff will review the petition for redetermination and the underlying facts of the case, and if there is additional documentation not previously presented to staff, the matter will be referred back to the original staff member for reconsideration. If there is a disagreement with that assessment or deficiency and/or the taxpayer does not provide sufficient additional information for reconsideration, the matter may be forwarded for an evidentiary hearing known as an administrative hearing before an administrative law judge pursuant to NRS 360.370. This is the second stage of the appeals process. Administrative hearings are scheduled in Las Vegas, Carson City, or Reno, whichever is appropriate for the taxpayer's business. And if a taxpayer disagrees with the decision of the administrative law judge, the taxpayer may then appeal that decision to the Nevada Tax Commission pursuant to NRS 360.390. The taxpayer must file a notice of appeal within 30 days of the issuance of a hearing decision. Department policy requires that a representative from the Attorney General's office represent the department, and a taxpayer may represent itself or seek outside representation. Throughout the appeals process, the department strives to keep the taxpayer informed of its rights and responsibilities and the times, dates, and locations of all meetings and deadlines. Pursuant to NRS 360.360 and NRS 360.390, and any associated regulations, there are mandated time limits for responses at each level of the appeal. And finally, if the taxpayer is not satisfied with the decision of the Nevada Tax Commission, the taxpayer may appeal that decision through a petition for judicial review to the appropriate district court in the state of Nevada. A petition for judicial review must be filed within 30 days of the commission's written decision. As a prerequisite to filing the petition for judicial review of the commission's decision, the taxpayer must either pay the amount of the determination or enter into a payment plan agreement with the department. And just getting close to wrapping it up here, the following reports provided here on this slide indicate that are on the department's website, and they include information about sales tax collection and distribution by the department. The Consolidated Tax Distributions Report provides information regarding Nevada County's distributions of cigarette tax, liquor tax, the RPTT and GST, and the two components of the sales tax, which are the BCCRT and SCCRT. The General Distribution Statistics Report includes distribution statistics for a variety of taxes that also include our sales tax. The Local Government Tax Act report provides distribution information by county, which includes the county's portion of the sales tax revenue. The annual taxable sales statistics report includes the sales tax statistics for the previous fiscal years. The monthly taxable sales statistics report provides sales tax statistics for previous months. And the taxable revenue statistics in a monthly report that provide taxable sales by county and industry sector and provide monthly sales tax revenue collections. We do have several opportunities to assist and educate taxpayers and members of the public. We're in the process of reintroducing our Ask the Advisor training, both in person and virtually, as a couple options for taxpayers who are new to the department and new to their reporting requirements. The department also publishes what are referred to as tax notes, technical bulletins, and FAQs on a wide variety of topics. This is the department's effort to explain plain language explanations and enable taxpayers to report correctly and timely. We also have a call center and district offices located in Reno, Carson City, and Las Vegas. When a taxpayer has a specific question as to how a tax type might apply to the taxpayer's specific circumstances, an advisory opinion can be requested by the taxpayer. The process of requesting and issuing an advisory opinion includes a written petition to the director outlining the specific request and circumstances. And in most cases, when an advisory opinion is provided by the department, the taxpayer can rely on that information pursuant to NRS 360.294. If the taxpayer has relied to his or her detriment on the advisory opinion, the department may waive any tax, penalty, and interest owed by the taxpayer if there's a determination contrary to that advisory opinion. Advisory opinions are also confidential. And with that, Madam Chair, that wraps up our general overview. We'd be happy to answer any questions you may have.
Thank you for that. Members, any questions on this presentation? I promise you it'll help you read that bill. I did have like a comment and potentially a joke. Yeah, as it gets worse in the session. So number one, I super appreciate, I believe, slide 19 on, I think it was slide 19 on the digital goods. It's my page 18. I'm not going to put Mr. Nakamoto on the spot, but he intends on finding me a Bee Gees album for my digital goods presentation. And it made me think when I saw the catalog that I should start going on the hunt for one of those old J.C. Penney catalogs. Yes. But yes, I love old things. But I did have one question on the resale because I don't have internet and I probably could have looked this up on my own. But what was the origin of the resale statute? How old is that? How long has that been around?
Senator Neal, Shelley Hughes for the record. You know, I don't know how long that has been around. We probably look it up real quickly, but I don't actually have internet as well.
Right. Yeah. So, because I was, the question I was wondering, have you ever had to run into, I guess, Ticketmaster? Do you engage with them at all? I know you can't say like who, but on tickets, do you engage in tickets at all?
Shelley Hughes for the record. It's my understanding from staff with any type of ticket sales, there is no resale certificate that is provided when a ticket is resold.
Would that be complicated?
Shelley Hughes for the record. I think we would probably implement it the same as we do with sales tax. So I'm not sure if that would actually be that complicated to do.
Okay. Good to know. All right then. So no questions on the presentation. Thank you much. And now we will open up for the hearing on SB 50 and welcome the tax team back to the table one more time. All right then.
Thank you again, Madam Chair and committee members. We are here today to present Senate Bill 50, and for the record again, my name is Shelley Hughes, Executive Director for the Department of Taxation, and I have with me Chief Deputy Yvonne Navarez-Goodson to help me walk through the bill. At first, I'm going to just give you a little bit of background. As we have previously mentioned, Nevada is a member of Streamlined Sales and Use Tax Governing Board, and we have been a member since April 1st, 2008. States must comply with the requirements contained in the Streamlined Sales and Use Tax Agreement to be a member state. The agreement applies to the state sales and use taxes collected by retailers, and NRS 360B contains provisions for implementation of the agreement in Nevada. Again, the purpose of the Streamlined Sales and Use Tax Agreement is to simplify and modernize the administration of the sales and use tax laws of the member states in order to facilitate multi-state tax administration and reduce the burden of compliance. If a member state is found to be out of compliance with any provision in the agreement, the member state can be sanctioned and even risk not maintaining the status of a member state. Last session, Senate Bill 440 was signed by the governor and amended NRS 372.7281 and NRS 372.7282. The law created a sales tax holiday and provides an exemption for Nevada sales tax on the sale of tangible personal property to certain Nevada National Guard members and their qualifying dependents in Nevada. The period of tax exemption is on the day of Nevada Day that it is observed, and the Saturday and Sunday immediately following. Members of the National Guard are required to apply for a letter of exemption with the department 30 days before the date in which Nevada Day is observed. If eligible, the department will issue a letter of exemption. The bill requires that when the National Guard member or qualified dependent makes a retail purchase during the sales tax holiday, that the letter of exemption is provided to the seller. The seller then is authorized to sell the member or qualified dependent without imposing sales tax on the sale. The seller then is required to retain the copy of the letter of exemption for audit purposes. The sales tax holiday provisions expire on June 30th, 2031. And after this bill became effective and the law was in place, it was determined that the bill violated the Streamlined Sales and Use Tax Agreement, specifically Section 322. That section provides 4 requirements that must be met if a member state allows for temporary exemption periods, commonly referred to as the sales tax holiday. SB 440 did not meet 2 of those requirements. To implement a sales tax holiday, Nevada could not apply an entity-based exemption to items and could not require the seller to obtain a letter of exemption from a purchaser for items to be exempted during the sales tax holiday. SB 440 did both. The Nevada sales tax holiday applies only to qualified members of the Nevada National Guard, and it requires the National Guard member to provide that letter of exemption to the seller when it purchases items to be exempted. Nevada was sanctioned for our violation of the agreement in May of 2022, and our governing board delegate is prevented from voting on any other states' compliance issues. If we fail to come back into compliance in 2023, we will not be able to use our voting rights on any amendments to the Streamlined Sales and Use Tax Agreement. SB 50 is the result of discussions with members of the governing board and is an attempt to bring us back into compliance with the agreement. SB 50 takes a different approach to the sales tax holiday, and instead of exempting purchases by qualified National Guard members during the sales tax holiday period, the seller would collect the tax on the purchase. The National Guard member then would remit any receipts from this period, along with a copy of their letter of exemption, to the department within 30 days of purchase. After confirming that the sales tax was paid, the department would refund the sales tax on any qualifying purchases made during the sales tax holiday period to the National Guard member or its qualifying dependents. Not only does SB 50 carry the same intent as SB 440, which is to allow a period of time for National Guard members to purchase tangible personal property exempt from sales tax, it also brings us back into compliance with the streamlined sales and use tax agreement. So I'm now going to turn it over to Chief Deputy Navarez Goodson to walk through the sections of SB 50.
Thank you, Madam Chair, members of the committee. Yvonne Navarez Goodson, Chief Deputy for the Department of Taxation. As mentioned by Director Hughes, I would like to present an overview of Senate Bill 50, including a brief history of the existing provisions and the need for the amendments set forth in SB 50. By way of overview, I'd like to offer a clearer understanding of the existing sales tax exemptions that currently apply to the National Guard under existing law. Under NRS 372.7281 and 372.7282 and the counterpart provisions in NRS Chapter 374, which are applicable to the local school support tax, there are 5 exemptions applicable to the National Guard. Rather conveniently, these 5 exemptions appear consecutively as subsections 1 through 5 of these statutes as follows. The first exemption applies to an active duty member who is on active duty status for more than 30 days outside of the United States. The second exemption applies to certain relatives of an active duty member who is on active duty for over 30 days outside of the U.S. The third exemption is for certain relatives of deceased members of the National Guard who were killed in the line of duty while in active service. The fourth exemption is an active duty member who is a resident of the state of Nevada during the sales tax holiday, the Nevada Day weekend. And the fifth exemption is for a relative of that member during the same holiday weekend. More specifically, for the first exemption, go ahead. Yeah, thank you. For the first exemption, under subsection 1 of the respective NRS provisions, this applies to a member of the National Guard who must be engaged full-time on active duty status outside of the U.S. It applies, the Guard member would apply for the letter of exemption through the commanding officer and would ultimately obtain that letter of exemption from the Department of Taxation. The exemption would expire 30 days after the member returns to the United States. They would provide that letter of exemption to the retailer, and the retailer would retain the letter and present it to the department for a refund. For the second exemption, these are the relatives of those active Guard members outside of the U.S. The same provisions would apply, but the defined dependents or family members include those who reside in the same residence in Nevada as the Guard member and who are related to that Guard member within the first degree of consanguinity or affinity. This is defined to include a spouse, parent, or child. The third exemption, which currently exists under current law, under subsection 3 of the respective NRS provisions in chapters 372 and 374, this applies to, again, those certain relatives of active duty Guard members who are killed in the line of duty. These family members, again, include those who resided in the same residence in Nevada as the Guard member and who are related within the first degree of consanguinity or affinity. These family members must file an application with the Department of Taxation for the letter of exemption. The exemption will expire 3 years after the date of death of the member. They will provide the letter of exemption to the retailer, and the retailer will retain that letter and present it to the department for a refund. The department issues that refund to the retailer. The fourth and fifth exemptions taken together include the active National Guard member and those same family members during the Nevada Day holiday weekend. This is the sales tax holiday provisions. Under subsections 4 and 5 of these respective provisions in NRS chapters 372 and 374, adopted last session in SB 440 during the 2021 legislative session, is where this exemption was created. The Nevada Legislature created an additional temporary exemption known as the sales tax holiday for the Nevada Day weekend. This exemption applied specifically to members who were on active status and who were residents of the state of Nevada, and those family members, again, who reside in the same residence as the member in Nevada and are related within that first degree of consanguinity or affinity. Under the existing law, as set forth in SB 440, that member would apply through the commanding officer and obtain a letter of exemption from the Department of Taxation. The exemption lasts for 3 days. It's the Friday on which the Nevada Day is observed and the immediately following Saturday and Sunday. That exemption expires on June 30th of 2031, or that provision sunsets in 2031. As I've outlined here on the slide, the highlighted portion, under existing law, the practice is that the members or their relatives will provide the letter of exemption to the retailer. The retailer will retain that letter and present it to the department for a refund. The department issues the refund to the retailer, and these are the specific provisions that were determined to violate Streamline. And this is what we seek to amend in SB 50. Senate Bill 50 amends the exemption available under the sales tax holiday for the Nevada Day weekend and does not alter the other existing exemptions available to the National Guard and their families. The exemption will remain available, but the mechanism for receiving the benefit will change. Members will continue to apply through their commanding officer, and they will also obtain the letter of exemption through the Department of Taxation. This exemption will continue to exist for those 3 days. In October, the Nevada Day holiday weekend, which is the Friday on which Nevada Day is observed, and the immediately following Saturday and Sunday. The changes that you'll see in SB 50 to these provisions indicate that now, under the new circumstances as presented by the bill, the National Guard member or the family member will actually pay the applicable taxes to the retailer. However, that Guard member may then present a receipt from the retailer as well as the letter of exemption provided from the Department of Taxation to the department within 30 days of that purchase for a refund from the department. Late yesterday, we also submitted a clarifying amendment. You may have that before you. This is a minor clarifying amendment to satisfy a request made by Streamline to confirm in statute the role of the retailer. As limited to this sales tax holiday for the Nevada holiday weekend, the Guard member or the family member will not present the letter of exemption to the retailer. Instead, the retailer will charge and collect the tax and remit it to the department. The member will then present the receipt from the purchase along with the letter of exemption to the department for a refund. And as also mentioned, I won't go into too much detail again, as Director Hughes already mentioned, the provision of the Streamlined Sales and Use Agreement, Section 322, is the provision that was deemed to have been in violation. The two provisions were the requirement that it applied to a specific entity and also where it required the on the temporary basis to provide the letter of exemption to the retailer. And these are the two provisions that we're changing in SB 50. That, Madam Chair, we'll take questions.
Okay, thank you for that. Members, any questions on the Senator Spearman?
Thank you, Madam Chair. I don't know if you all can answer this or not, but I guess my question would be, and I respect SUTA, but I've also served overseas and also been a company commander and know the difficulty that many people in the service face when you put a whole lot of restrictions, such as this. Less than 1% of the population right now has ever served in the military. And requiring that paper trail seems to be an undue burden. How many people that serve in SUTA have ever served in the military? You may not be able to answer that. My concern is always that we should make it as easy as possible on the service member and on their families. One of the things that we cannot brag about is most people who serve in the military, especially the lower enlisted, they also receive SNAP benefits. So pay the tax, keep the receipt, send it to somebody, they send it to somebody, and then you get the money back. By the time all that happens, the service member very well may be someplace else. I don't know what we can do to help them understand that the reason the law was written like this was to make sure that the service member was not disadvantaged. And if anybody that's in the decision-making process of SUTA has ever served, they know exactly what I'm talking about. If they haven't served, they have no idea what I'm talking about. Does that make sense to you? That's not, please don't take this personal, but I do when we have that kind of trail for members. And quite frankly, you know, and I was looking here at some of the people in Nevada who lost their lives. 5 of them that I looked at were people who lost their lives in roadside bombs. You heard the alphabets IED, improvised explosive device. IED on the roadside or a suicide bomber. This is probably going to pass because we have to comport with SUTA. I would just ask that SUTA be reminded that freedom is not free, and we're the land of the free because of the home of the brave. Just my thoughts.
Senator Spearman, Shelley Hughes for the record, and thank you for your service. I wanted to clarify that those members out of state can still use the other process of presenting the letter of exemption to the retailer. It's only for the sales tax holiday that we have to adjust the process. And we are working with General Berry to help ease the burden on members of the National Guard. So any way we can do that, we'll be sure to do so.
Yeah, and thank you for that, and I got that part. I want to make sure that I put it on the record that even those who are here, I'm trying to remember how many rotations we've had. I know the military police, National Guard military police have rotated in and out of Iraq and Afghanistan, and some even were in Kosovo, 20 years ago. Some are detached or attached to some units that are helping us support the process of freedom in Ukraine. So the geography mocks next to people who haven't served, but as someone who has and knows the difficulty, keep this receipt, and then, my sentiments, and whoever at SUTA has said that this is acceptable, and if it's unacceptable because it's something that other states have not done or that is not in line, with that, then maybe they should reconsider.
Thank you, members. Any additional questions? I had one. I know it's all tangible goods, but when you were going through the marketplace facilitator information, it just made me think, what's the process if they're buying the tangible good online through a marketplace facilitator? How are they administering the process? Because like when you're in the store, it's different, but online, they don't know who you are.
Shelley Hughes for the record. That is a good question. I do know that there are certain marketplace facilitators that have a process to accept those letter of exemptions. I'm not sure if all marketplace facilitators do, but they are required to exempt the sale. And I think that's part of the reason why Streamline finds that it could be a burden on retailers, because it's hard for a online retailer to know the law of 50 different states and who's exempting what sales.
Thank you for that, because it made me think about, when you go on Amazon and you're going through payment, I don't recall seeing anything that says, like, there might be a little coupon code, but you're not able to identify who you are. I don't know if that's a point of burden or a point of audit. No, okay. But being that there's only 34 of them, might be something to think about. Anyway, Any additional questions? So seeing none, I think there are no questions. I think I understand the amendment. And just for the record, I'm on the SUDA board and I'm an executive member, and I was prevented from voting because of our non-compliance. And so, but I kind of also asked for the sanction too, so that we could understand that we're a member state for a reason, and that we just can't pass policy that doesn't make sense for Nevada. But your point is well taken, Senator Spearman, about the burden, because that's something that SUDA focuses on a lot, is burden. So I will go ahead and open it up. We have some people signed in support, and I will call them to the table. So anyone that's in support, I know I have at least 3 members signed in for support. You can come in and fill in the chairs. And we'll just go left to right. Just state your name for the record. Yeah, go ahead.
Chair Neal and committee members, for the record, my name is Andrew Lee Pilbit. I have been the chairman of the United Veterans Legislative Council since 2019. I represent the 279,000 veterans in our state, and that is based on the 2020 census, which had us at 8.9%, which places us the 7th largest veteran concentration in the nation of the 50 states, which is pretty high. So when you consider our 9% nearly veterans in our state, and you take into account their immediate family members, that's about 500,000 Nevadans. That's 16% of our population. Now, I had a lot to say. However, Senator Spearman said exactly what we would have loved to hear, and I applaud her for it, so I will say ditto to those comments. We have passed the burden from the retailer to the National Guard member, which is a significant difficulty for these young people. Our National Guard in the last 20 years is not the same Guard of my day and time, just so you know I'm really old. And in my time, you joined the Guard so you didn't have to go to all these places. But in the last 20 years, our National Guard has become an active component of our military. And each of these units, I know we have one right now that's been deployed in the Signal Corps. The military police is constantly being deployed. We've had some units in some war-torn areas in Africa, which you don't hear about. In Poland, we've sent them. My point here is we understand the need to be in compliance. We're deeply saddened that we've changed the burden from the retailer to the veteran National Guards person. But we are in support of this bill because we do not want to lose what they more than are due themselves from us as citizens. So we are in support of the bill. Again, Andy LaPelbit, United Veterans Legislative Council. Thank you.
Thank you for your testimony.
Good afternoon, Chair Neal, members of the committee. For the record, my name is George Ritz. I'm with the Nevada Taxpayers Association. As you just heard in today's brief, Nevada was one of 23 members, full members of Streamlined Sales and Use Tax. I also believe they were one of the founding members of Streamlined Sales and Use Tax. I'd like to thank Director Hughes, her staff, Department of Taxation staff, Fred Nicely and Patrick Reynolds from Streamlined Sales and Use Tax for their hard work on Senate Bill 50. It's good policy to bring Nevada into substantial compliance with SUDA, and why the Nevada taxpayers supports this bill as written. Thank you.
Thank you for your testimony. Next.
Good afternoon, Chairman Neal. For the record, I'm J.R. Stafford, President of the Vietnam Veterans of America Chapter 989 in Reno. I represent 242 members of a much larger body of Vietnam veterans throughout the country. I'd like to thank Senator Spearman for her comments and they are very germane, having deployed myself on numerous occasions, and on occasion later than Vietnam. And any burden that we can unburden our deployed members would be most appreciated, and I am firmly in support thereof. Thank you very much.
Thank you for your testimony. Okay. Is anyone else in support? You don't have any additional comment? Mr. McKay.
Hi, Madam Chair, members of the committee. For the record, Andrew McKay, I'm the Executive Director of the Nevada Franchise Auto Dealers Association. We just want to come to the table and say we support this measure. Senator Spearman, completely echo your thoughts and concerns on this. However, we want to thank the department for this, because when this sales tax holiday comes up, as you can imagine, the folks that sell new vehicles, those are big ticket items. And rightfully so, these service members want to be able to take advantage of that, and they should. And it may be a little more cumbersome, but at least they're going to be able to access it. And from that standpoint, we enthusiastically support it. And thank you and everybody in the room that served. Proud son of a Vietnam vet. And anyway, really, really appreciate you all for addressing this. Thank you so much.
Thank you. Thank you for your testimony. All right. So that looks like everybody that was signed in for support. Is there anyone here in neutral to the bill, meaning that, in Vegas, is anyone down in Vegas? It looks pretty empty, though, unless somebody's hiding behind that podium, Mr. Nakamoto. I think there's nobody there. Is there anyone on the phone for support to SB 50? BPS?
Thank you, Chair. Thank you, Chair. To provide support to Senate Bill 50, please press *9 on your phone to take your place in the queue. Caller, you're unmuted. Please proceed.
Yes, good afternoon. My name is Brian Walker. I'm the Senior Vice President of the Retail Association of Nevada. I want to thank Chairman Neal for the presentation today, as well as the opportunity to talk about this subject. I want to thank the department for outlining all of the great reasons that Nevada is a member of the SUDA organization. And I'll go through real quick before I get to Senator Spearman's comment. This SUDA agreement levels the playing field between our Nevada brick and mortar retailers and online companies from other states. We have a competitive disadvantage when state law requires us to pay that sales tax. And so the more entities that are exempt or find loopholes around that, the more competitive disadvantage that Nevada retailers are in. Easier compliance for laws equals more taxpayers who are providing more revenue. And it allows smaller retailers in Nevada to be able to compete with retailers who have the staff and the expertise to be able to operate in 50 states. Most of our mom and pop retailers, it is just them. And so their ability to expand in Nevada is reliant upon them to be able to export their goods out of state. And so when they are following one consistent set of laws as opposed to different 50, they are able to succeed. And we strongly urge the passage of Senate Bill 50. I did want to address Senator Spearman's comments. We are not indifferent to that situation. I think here, though, what we have is the bill that passed in 2021 doesn't take into account how retail sales are transactions in this day and age. To have to physically present a letter to a retailer and then leave that letter with the retailer, which means every transaction that you and every transaction that your family member is going to operate on over those 3-day periods requires its own letter. And so that can be cumbersome in and of itself. You also have to deal with situations that are being brought up. How do you deal with exemptions online? A lot of our folks have special accounts that those who are exempt are utilized because those exemptions are so narrow. And so oftentimes the infrastructure isn't set up. And so even having an item delivered to your house wouldn't offer you the ability to present that physical letter to that retailer. And so by doing it this way, it is actually our hope that those service members will be able to utilize far more different services, far more retailers in their transactions over the weekend and be able to maximize the benefits that the legislature is setting forward. So for all those reasons, we are in favor of Senate Bill 50 and we urge its passage.
Thank you for your comments. BPS, is there anyone else on the phone in support for SB 50?
Yes, thank you, Chair. Let me make one more announcement. To repeat, we are currently in support testimony on Senate Bill 50. If you'd like to testify in support, please press star 9 to take your place in the queue. I do have another caller, Chair, but it looks like they are not in support at this time. We
Okay.
have no additional callers.
Okay, thank you for that. So is there anyone in the room in neutral on SB 50? Okay, is there anyone on the phone in neutral on SB 50, meaning that you like it, but you have suggestions for an amendment?
Chair, the public line is open and working, but there are no additional testifiers that have called in at this time.
Okay, thank you for that. All right, so is there anyone in the room in opposition to SB 50? Anyone down south? Is there anyone on the phone, BPS, in opposition to SB 50?
Chair, there are no additional callers to the public comment line at this time.
Okay, thank you for that. So, Department of Taxation, would you like to come for some closing comments? Being that no? Okay, well, Senator Spearman, go ahead.
Thank you, Madam Chair, for your indulgence. I just want to make this clear. I am sensitive to the cumbersome nature of the current law, and I'm not indifferent to the testimony about large ticket items and what that means. But the average lower enlisted, that means E1 through E4, that's a private all the way to a spec 4, maybe 5 sergeant. Here is the current base pay from $1,917.60 per month to $2,547 per month. That's what they make, space pay. And so my comments are really designed to say, somebody, you know, and the receipts, paper receipts, I usually never get them. I tell them to send them to my email, okay? But I know that a lot of people who are deployed don't have access to that. And so what I would say is if there is a way to use technology and something digitally so that it would not be as cumbersome on the retailer and then placing that burden on the service member or their families. That's the only thing that I am objecting to. I'll vote for it, but I just need people to understand the plight of our service members. And like I said, you know, if you've never been shot at, you don't know what I'm talking about. You know, and if you've never had a family member, you know, you're a Gold Star family, you've never had a family member, you got that call that you didn't want to get, or you saw the chaplain show up at your door. And so all I'm saying is less than 1% of the population, and that's very sad because there are very few people who understand what's going on with our service members. $1,900 a month, that's base pay, to $2,500 a month. You know, and in most places, I know in Vegas, you can't even get a one-bedroom apartment for $2,500 a month. So just take that in consideration. We will comport. I'll vote for it. But if there's any discussion about how we might be able to do something like this and lessen the burden on the service member and their families, I'd really appreciate it. That's all.
And thank you, Senator Spearman, for your comments. And I want to say this about Department of Taxation. The amendment that you saw today literally is the second amendment that I think in 72 hours? So it is, I know that Ms. Hughes is hearing you. I'm hearing you. We're just trying to make it make sense. and present the bill because I wasn't changing the schedule. So, okay. So thank you, Department of Taxation, as always, for your in-depth presentation. We will close the hearing on SB 50. Mr. Nakamoto has a note to share with the members if you guys feel so free to want to indulge in tax policy as much as I do and read as many documents as possible. Then he has some very, I think, is juicy information to share around taxes. But go ahead, Mr. Nakamoto.
No pressure. Thank you, Madam Chair. Members of the committee, for the record, my name is Michael Nakamoto. I'm a Chief Principal Deputy Fiscal Analyst with the Fiscal Analysis Division. There is one more exhibit in Nellis for today's meeting. It is titled Overview of State and Local Sales and Use Tax Rates in Nevada, and is by the Fiscal Analysis Division. This is basically supplemental information to some of the information that Director Hughes and her staff presented in their PowerPoint relating to the various sales and use tax rates that are imposed under current law in Nevada. So it's a 10-page document. And basically, it's an overview of those state rates as well as the local rates broken out by county. The main differences or the expansion of the information that we provide in these tables are the statutory authority, as well as some footnotes relating to the legislative history on these, as well as the actual collections as reported by the Department of Taxation in FY22. And that makes up the first about 6 pages of that 10-page document. Page 7 is Table 2, which basically takes it and rearranges it and lays out each county by the component rate, so the state 2% rate, as well as the BCCRT, SCCRT, LSST, and then some of those local option rates that have been previously mentioned. On page 8, basically takes that information and turns it into a chart, so you can see it as a graphical representation. And then pages 9 and 10 are the ones that I thought were the most fascinating as we put this document together, and those are these various sales and use tax rates that are codified under current law but that are not currently being imposed. This was information that the chair asked for us to put together for the revenue JISC back in February and has been updated for this meeting. And I just wanted to let you know that it was there. I know that its time is just about up, but if there are any questions, I would be glad to address them. Thank you.
Thank you, Mr. Nakamoto. Any questions to Mr. Nakamoto? Okay, seeing none, thank you for that information. We will go ahead and adjourn Senate. Go ahead. Huh? Oh, is there anyone here for public comment? I keep forgetting that. Seeing none, we will go ahead and adjourn Senate. Okay, sorry. BPS, is there anyone on the phone for public comment?
Thank you, Chair. To provide public comment, please press *9 to take your place in the queue. Chair, we have no callers wishing to provide public comment at this time.
Okay, thank you. So we will go ahead and adjourn Senate Committee on Revenue and Economic Development.